All right, welcome back, guys. We're still here live from Dubai at Token 49. And right now, I've got my guests, Max Boonen, PVO1, Thomas from B2C2, and Samar from Talos. Welcome, guys.
Thank you for having
I
us.
feel a little bit left out because you guys are all ex-Goldman's alumni. Do feel a bit left out at the same time. I got interviewed by them 3 times in my career, and let's just say I'm not a Goldman sort of person.
We only just identified that today, that we all did stints there. And
Well, you know what?
Interesting.
You made it out alive. Well done. All right, so let's start with you, Max. So you founded B2C2, where Rise now works, right? So, but now you've left and you set up PVO1. So I'm quite curious to know how that journey was, right? From starting a market maker in the space, a successful market maker at that, and then what made you want to switch, change it up, start again from scratch with what you're doing now?
Well, I started B2C2 because I didn't think I was a great future in interest rates trading at a big bank.
Right.
And Bitcoin was that new, shiny, weird thing. Mm-hmm. And so I started trading that in 2013 before leaving my job 2 years after that. Right. But the journey to do PVO1 was a bit different, is that I wanted to invest in European government bonds. I wanted to buy some Italian bonds because I thought they were undervalued. There was something to do there. And I realized that even though I had all those fancy brokers, it was very difficult to do. United States debt, US govies, you can buy. It's not that difficult. But anything beyond that is almost impossible. And I thought it's crazy that if you're on Robinhood, within 2 clicks of a button, you can buy the craziest stocks on earth.
Yeah.
But for some reason, it's almost impossible to buy even the debt of a major country. And I sought out to fix that at the same time as we can't in crypto disrupt the way financial markets work. And we say this as three Goldman guys, yeah? If we can't have all the normal, very basic financial products on chain. And so I thought we got to bring bonds, government bonds, corporate bonds on chain.
Interesting. I guess my only pushback, and it's not really a pushback, but I guess my guess would be meme coins are sexy. Not meme coins, but meme stocks are sexy because they can double in a week, right? And so that has an appeal to retail, right? That they want to trade that, right? So there's very much a use case there for the Robinhood to have that sort of thing available, right? I guess you, coming from a financial markets background, you understand debt instruments and the fact that you want a more risk-free asset that gives you a good yield. But how many of the laymen on the street are bothered about that type of payoff relative to something that's going to make them rich quick?
You're very right. And for a long time, I thought that it's a barbell strategy in crypto. Either people want the craziest stuff or the safest things like government bonds on chain.
Right.
In fact, I'm starting to wonder if maybe we have just one end of the barbell. Just people want the crazy speculative stuff. Because if you look at the size of the US Treasuries market on chain, it's $2-3 billion, which I think most people in the market would have hoped that would be something like 50 billion by now. It remains a bit of a puzzle why we have such huge stable coins where people are forfeiting the yield, and we've not seen more adoption there. And I think there's something to say that indeed it's maybe that the typical trader in crypto isn't so interested in that. And when you look at finance as a whole, typically you've got something that's adopted by institutions like, let's say, interest rate futures that then becomes more accessible to first more like prosumer traders and then everyone else. Mm-hmm. The one time it was not the case is actually, when you think about that, perpetual swaps are more of a crypto invention that I think is now getting more and more acceptance. We're starting to see more perpetual products. I think the CME is even talking of issuing something like that. But we have to admit that the crypto market as it is today still focuses on the crazier end of the spectrum.
Interesting. And Thomas, so B2C2, so he's gone. The founder left.
Finally.
What has he left behind? Yes. What has he left behind? Tell us what you guys are kind of...
Well, he's left probably one of, if not the largest OTC franchise or liquidity provider in the digital asset space today. So, quite an endeavor to take it to the next stage, even higher, better, stronger. But I think if you had to come in and take over a company, I think you would want the best platform to
And that is a question. Like, how does, and I've asked this to some of the other market makers in the space. Like, how does one, with this much competition in space, how does a market maker kind of win? Right? How do you compete? How do you outcompete the other players in the space? How do you differentiate yourself as a market maker?
Well, we have the benefit of being that early.
Yeah.
That's always an asset, so it creates reputation. And we were there at the time where probably competition wasn't that fierce. And we also had a lot of time to evolve the product and the services that we offer. I think we're operationally one of the better shops on the street. We follow a mantra, which is we're here to support the blockchain ecosystem. So the first principles, we will build products that are making the best of on-chain benefits.
Is it all native stuff we're doing, basically?
It's all in-house built. This is all...
But like collateral-wise, for example, because you do OTC as well, right? So do you accept dollar collateral, or does it all have to be crypto collateral?
No, we'll take any type of
Okay.
any type of collateral. There's a big quest of the ecosystem to get acceptance of collateral, of multiple types of collateral.
Yeah.
Of course, Deribit would take Bitcoin and ETH as collateral. That's a massive step. We would go down even further on the spectrum. We're very comfortable. It's our job to provide liquid fee in those assets. So becoming the liquidation agent of the collateral you hold is very easy for us. It's actually much easier for us than it would be for almost anyone accepting Bitcoin collateral or any sort of collateral, because if there is an issue, where do you liquidate it? What's the value of it? How do you get rid of it? Liquidation agent.
Because I obviously trade on Deribit, and I have to say, before Deribit, I never really traded an instrument where the collateral that you post has got this embedded delta exposure to it, basically, right? And it's funny, like you look at payoff diagrams of options, and if you're short or put on Deribit, it's like the hockey stick from hell, they call it, right? Because it's like it turns into this curve, and your margin just evaporates really quickly, right? Because the dollar value of it is dropping as the thing is dropping, and your liability is growing in dollars, and the margin is shrinking in dollars at the same time, right? So I found that really interesting. And I guess my question would be, does that sort of native collateral, the fact that there's a lot of that going on, does that create like fragilities in the system in terms of for people?
Were you there on 13th of March 2020, one of the most traumatic days of my life? You remember? The BitMEX crash.
Yes.
And the Bitcoin went to like 5,000, the cash market, but on BitMEX something like 3,000, because everyone wanted to be long because the price was crashing. So the perpetual was trading very, very discounted. But then as it kept going down, the collateral was worth less and less. And there was a level at which there was no one actually who had enough collateral on the exchange to take the other side. It was extremely, I think it pretty was the most violent event in crypto that I've ever seen in more than 10 years.
So it does create fragilities, right?
Oh, yeah.
Those fragilities, they clear very quickly, I guess, right? People just get liquidated and you move on. Right? They take their hit and the rest of the market moves on without you, kind of thing, right? I guess.
Well, interestingly, the biggest fragility that has really had ripples in the market wasn't the BitMEX crash, because as you said, I think one or two shops blew up, but by and large was fine. The biggest fragility have been introduced by credit links, 3 Arrow, Celsius, etc. And those are more TradFi type of exposures.
Yeah. So Samar, let's bring you into the conversation a little bit. So, Talos is obviously massive in the space. Some people say you want to be the Bloomberg of crypto. I don't know if that's true.
It's not 100% wrong as a way to describe us. Like, we are the leading provider of digital asset trading infrastructure to folks on the buy side and the sell side. We are, happy and we have great relationships to be integrated with Deribit. We're integrated with B2C2. And our customers who are coming from institutions, whether you're a hedge fund or an asset manager, or on the sell side, you're an e-trading platform or a broker, you want that professional toolkit because you're trading massive volumes. When I say professional toolkit, I'm talking about aggregating liquidity across all the exchanges and OTCs, having complex algorithms to ensure your best execution, having your data and analytics, and being able to risk management correctly with portfolio management systems that are sophisticated. So these are the tools that we bring. And so this is the role that we play as we work with firms like these.
And I want to talk a bit about the new products that you're creating at PVO1, right? You're giving people access to. So, I had a look on your website. There's various six-week bills and stuff up there that are offering yields and things like that. Like, when you're creating that, I see that as like the beginnings of like a new credit market that you're creating essentially within the space, right? You're saying fixed income instruments that provide higher yields that people may want rather than these crazy high-fall other instruments in space, okay? But what is the benchmark? What is the benchmark yield that you measure all your products against? Like if I'm trying to figure out what the credit risk is on a B2C2 bond, right? What am I comparing the yield against to figure that out?
Well, I'm a markets guy. Fed funds. I'm a markets guy. So to me, the yield is set by the market. The question is, what is the product? And I think that the real change here is that tokens are a real innovation because we move from a provider-centric model where you have a broker, they offer some product. If there's something they don't offer you want, shit out of luck, yeah? To a token and wallet-centric approach where you have your wallet, that's where you have your assets, and then firms compete for access to your wallet, right? And you see that in DeFi, any website you go, there's a button in the top right, connect wallet, and that's it. In 5 minutes, you can use it. That's a real change of paradigm. And we're trying to contribute to that. And in practice, what it means is that in terms of tokens, we've got the native tokens, Bitcoin, Ethereum. Then we've got the ICO equity-like tokens, like the Uniswap governance, all that stuff. And what we're missing is the fixed income tokens. Fixed income, by and large, in crypto has been done as bilateral private deals that when something goes wrong, it's difficult to get out of the deal, right? When we had the FTX bankruptcy, everyone had claims with FTX. There was a market where you could sell your claim that worked, but it was kind of clunky, huge fees, etc. Imagine that all your loans to FTX had been represented by a token. Then instead, you go to Curve, you go to Uniswap, you sell your token. That's it. And
you got out of the credit exposure.
Exactly. So maybe not at the price you like, but at the price. So including fixed income in the suite of tokens that we use to exchange risk, that's the next step.
Yeah, but what is the benchmark rate still? Like, what is that?
I mean, with treasuries, you just look at whatever the yield of treasuries is minus like 10, 20 bips of fees. And for credit, you have to realize that lots of those credit exposures exist today. So there's loans between companies that have a yield on them.
Yeah.
So those you can just plug in the bond token at the same yield if you wish. But other than that, I mean, it's really driven by the market. Now, if you ask me what makes the yield be what it is in crypto, it's coming down always to the demand for leverage. People want to go long crypto or they don't want to, and that sets the price of leverage in the market. And so when the market's very bullish, you see on Deribit, the futures trade at a huge premium. You can turn it into an annualized rate. That is the price of leverage. That is the yield in crypto today.
If I'm trying to raise capital via issuing like a crypto bond on chain, like, other than offer a higher yield, is there anything else that I can do to make my product more attractive for people to want to own, to want to invest?
You can look at TradFi for that. People issue convertible bonds because convertible bonds have that little je ne sais quoi.
Yeah.
The convertibility allows you to make investors a little bit excited. There's a bit also convert-up community. So that you can do things like that.
Yeah, I mean, we're forgetting about some of the fundamental transformative things that the tech is bringing as well, right? So there will be this idea of access and distribution. So you can access more investors and diverse investors who don't have to have a 200K minimum, right? Servicing the bond is going to be cheaper because all the smart contract programmability is going to bring this ability for it to be, you're not manually doing spreadsheets on the investment banking side. And so as it brings down the cost of that, you can actually do your capital raising through this path in a way that should be cheaper for you.
And it's lower touch.
Yeah.
Lower touch, less links in chain.
Yeah.
Right? Interesting. And then from a Talos perspective, like, as these new products come online, are you integrating them into our system so people can actually see on a screen, like, what yields are available in fixed income and that sort of stuff?
I'm really glad you asked that question. We are very, very bullish on all assets going onto digital asset rails in the future. We really believe in that.
Yeah, so all TradFi assets coming over to
on-chain. But it's happening slowly and in different areas first, with different assets first, because organically some assets are already very liquid and very electronified and efficient.
Are coming now quickly.
And yeah, I mean, you know more about this than me, but we've seen tokenized money markets, which is stable coins, right? But you've seen gold, you've seen bonds, you've seen real estate, repo, trade finance, whiskey, whatever it is, art. But
Right.
that's not the point. The point actually for us is that we know that as folks like him are going to start innovating and bringing all these new products into the marketplace, people will want to trade them in a diversified portfolio apart from just having meme coins or speculative alternative coins.
Yeah.
Right, along with your Bitcoin, along with your stable coins, you're going to want to start participating in other innovative products. And so yes, from a Talos perspective, we will integrate with any venue that will start offering secondary markets trading on these issuances.
Yeah.
The only challenge, and you know this firsthand, is that it's taking time for that whole value chain to come alive. You need a corporate that's brave enough to do this capital finance this way. You need a tokenization standard, which folks are building. You need a blockchain of choice. Then you need the primary distribution, and then your secondary markets trading. That's what, and the regulatory pathway to do it. So until that whole chain comes alive, which requires a lot of global cooperation, we only have small bits happening, but the tech is there, and it's a very exciting time. And we think in the next few years, capital markets are going through a massive change.
I think that's a great place to end it, man. I appreciate you guys coming on and joining me in this beautiful venue out here. And I hope you guys have the rest of your stay in Dubai is a good one. Cheers.
Thank you so much.
Thank you.
Thanks a lot.